Well, the red-hot housing market may be starting to cool a bit. A new report today shows that prices are still climbing compared to a year ago, but the pace of the gains appears to be slowing a bit. And that has many asking if the run-up in prices is sustainable. Diana Olick takes a look.
The latest gains on the S&P Case-Shiller Home Price Index hit a new high, but were slightly smaller than expected. The national index rose 5.5% year over year in April, down from 5.6% in March. But here comes the perspective. These are prices that were recorded on closed sales in April, so sales that were negotiated in February and March. Since then, the supply situation has only gotten worse due to higher demand in the spring market. Seattle, Portland, and Dallas reported the highest annual gains in prices, and 7 cities had bigger annual increases in April than in March. S&P's David Blitzer raised the question in his release of a potential bubble or crash, but then he knocked it down, saying that demand and employment still support the prices for now. We're also not seeing the kind of housing boom at all that we saw in the last decade. Professor Robert Shiller told me he does not believe home prices are too high. In fact, he shows that adjusted for inflation, they're actually still below the peak of the last housing boom. Still, again, these prices are a bit old. A new demand index from Redfin reached another record high in May, with 9% more buyers requesting home tours and an even bigger jump in the number of buyers writing offers. For Nightly Business Report, I'm Diana Olick in Washington.